Hey everyone, this is Dan from InsideBars.com, and this educational video we're going to be breaking down the basics of what is an inside bar. And the very simple answer is that an inside bar is a pattern that you will find forming on every single time frame, on every stock, commodity, anything that you can possibly trade. The human psychology and emotional aspect of trading makes this pattern form time and time again. And the benefit of recognizing this pattern is being able to act on it, see clear setups, and have more confidence in your trades. So that's what we do at InsideBars.com. We send out automatic trade signals when these patterns are forming to tell us, heads up, there is a clear pattern forming and a break is going to be occurring. And we're always going to be adding different features to this website. So looking forward to the future of InsideBars.com and all the different tools that we can utilize as traders. Hey everyone, checking in on SPY IWM QQQ market rundown here heading into Monday, May 15th. So SPY here has an inside bar again on the daily time frame. We had the big dip on Thursday. The bulls bought that dip and we saw a little bit further consolidation on Friday. In my opinion, this week, the inability of the bulls to see a strong move to the upside was solely because of the financial sector. And the tech sector was extremely strong, continued to hit all-time highs, and was leading the way and holding the S&P 500 up. And here on Friday, we had the tech sector, or the financial sector, break to lower lows, break the low of Thursday. And like I said, in my opinion, it's going to require the financial sector bulls to show back up in order for SPY to see some significant momentum back towards the upside. So what we have is a range of 238.67. If we break that on Monday, it's a bear break, and we're looking down at 238.13, the low of Thursday. If we get a bull break of 239.43, we're looking up at the highs of the previous days where we've been consolidating. So we still have a clear higher low, higher high pattern, keeping these bulls in control of the overall trend. And this middle Bollinger Band support is catching up as well. And that's going to be defending these higher lows, so to speak. Whereas if we were to lose this higher low pattern, we would also likely lose the middle Bollinger Band as well. We are closing in on a potential bearish MACD cross. We're going to be keeping an eye on that. And the weekly time frame, you can see, is still very healthy after 3 bull weeks, 1 sideways red week of consolidation. Certainly nothing to worry about at this point. It's going to require losing these higher lows on the daily in order for the weekly time frame to start pulling back and consolidating to the downside. IWM, also an inside bar, and you can see the same thing where we had bulls buying the dip in a big way on Thursday, holding the middle Bollinger Band 6 days in a row, but we saw a much lower open and a much tighter range on Friday, and we're down at our supports here looking at 137.11, 136.98, and 137.16. So we're trying to build a base right around this 137 level, and our new resistance is our lower high at 139.48, the high of Wednesday. So losing the middle Bollinger Band is a setback in the short term. The weekly time frame for IWM is still very healthy. We're still consolidating after rejecting from the upper Bollinger Band with that new all-time high, and the middle Bollinger Band is 136.62 here on the weekly, so we are still holding that level. And it's up to the bulls to show back up and break 139.48 to indicate that they are ready to head back towards the all-time highs. If we were to break 136.98 and lose these moving average supports, the 50 and 100 day, that would be a red flag in the short term for the bulls. QQQ, you can see this continued strength, and it's really astounding at this point. Double top at the all-time high. Bull flag back 2 weeks ago, saw confirmation and continuation. Bull flag this week, looking for confirmation and continuation, but we have to break this double top. It's a double top by 1 penny. We closed right at that level, and bulls certainly more likely than not to break that level. We'll have to see how Monday goes. And if we do see a break, we're looking up at 139 psychological resistance from here, and our new support is established at the low of Thursday of 137.38. So pretty much this was an ideal follow-through day for the bulls. Obviously, if we hit a new all-time high, that would have been better, but just the green follow-through and a strong close after buying the dip on Thursday, and you can see SPY and IWM both did not see that. And let's look at these sectors real quick, and let's compare. So XLK, the tech sector, the #1 holding in the S&P 500, extremely strong, looking just like QQQ. And you look at XLF, the #2 holding in the S&P 500, that's the week we had. Consolidation, pullback, no follow-through for the bulls, and lower lows, and that is why the S&P 500 did not see the strength and follow-through the bulls were hoping for. QQQ on the weekly time frame, month in a row of green, little uptick in bull volume, close at the high of the weeks, 4 weeks in a row. That shows momentum, continuation, and strength. So that's what we're looking at heading into this coming week. Watch that financial sector closely. If it can't turn things around, we will likely continue to consolidate in SPY. I appreciate you watching, and I hope you have a great rest of your weekend.